सौम्या सरकार और आप देख रहे हैं वेल्थ रिडिफाइन ब्लॉग। इन टुडेज ब्लॉग we'll be talking about the US market. We have seen that US market had come down from a record level and almost the gain of last 1 year has been wiped out. So why it has come down and what would be the impact on the market and what would be the consequence impact on the Indian market. Now if you see that US yields, which is considered to be one of the major portion of bond market, has gone past 2%. Once it gone past 2%, obviously that's become a big worry for the global market, especially the global bond market, that a lot of money will flow into US Treasury and moving out of other bonds. US Treasury is considered to be the safest instrument in the world, and that is the reason once the US Treasury goes up, obviously the money flows happens in US bond market. So people are taking out money from the equity market and putting them into a safer thing called US bond market or US Treasury bills. Now the question is that why it has gone up. If you look at the US thing, in March 2020, when the COVID crisis hit all over the world, US decreased the rate. So not only US, all the major economies in the world reduced their interest rate so that the business gets the required capital and survives. India is one of the countries who did not openly printed notes, but US, UK and other developed countries had openly said that they will print dollars and increase the supply into the market. Because of the supply in the market, obviously they reduce the interest rate. So when Fed reduced the interest rate, obviously the money has gone from Fed to the common people. Common people started purchasing the things, and they also put money into the US stock market like Nasdaq or Dow Jones. When the money moves into Nasdaq and Dow Jones, obviously the market started going up, and not only the US market but also all over the globe, if you can look at, all markets all over the globe starts going up. That gives one of the major return in US market. And after that, you see that because of the huge cash flow is available and probably at a 0% interest rate, obviously people start buying the things. House has come almost with a 0 EMI or a very little kind of a thing, and the boom happened in housing market, boom happened in the credit card, boom happened in all those areas. So obviously the inflation goes up. Right now, US is in a scenario where the inflation rate is 7.5% and interest rate is 0%. Mostly we see this kind of things in a underdeveloped or you can say very, very low developed countries, but this kind of scenario in US is quite uncommon. So that gives Federal Reserve of US to increase the rate, so that tightening the policy and reduce the balance sheet. So while reducing the balance sheet, they will start increasing the rates. And by increasing the rate, they will start controlling the inflation. So approximately expected that by March, 0.5% to 0.75% rate is going to be increased. Once this rate get increased, obviously the money will flow from equity market to bond market, which I told earlier. And all over the globe, you can see that global markets are getting movement of cash from equity to US market. So that is the reason that you see the Nasdaq and Dow Jones had corrected significantly. And the return of Nasdaq has almost become zero in a 1 year perspective. On a 2 year or 3 year perspective, it is still high. Now come back to what will be the consequence on the Indian market. If you look at the Indian market, it got a huge flow from FIIs in last 1.5 years. So when market at around 8,500 level, all the central bank have reduced their rate. So obviously the money from US and other countries have flown into India, and it has gone up significantly. So market has moved from around 7,500 to around 18,600 level, almost with no correction. Now if you look at from October, the market hit 18,600 level, and by another 6 months, almost October, November, December, January, February and March, we are heading towards March. So on this 5 to 6 months, you see that market has come down from 18,600 to 17,200 level. So that means it has not given any return, rather it had given a negative return. And that is the very nature of the market. But interestingly, if you see that FII have sold approximately 1,40,000 crore in Indian market, which is highest after Lehman Brothers collapse or COVID time. Still, the market has not corrected that much. It's come from 18,600 to 17,200. This kind of selling, if would have happened in 2015 or 14 kind of a thing, I think market would have crashed by 50% by now. So this is one of the positive response from the market, because SIP book in Indian market is very strong. Second thing is that retail investors are pouring money even today. So these are the two reasons that yes, the Indian market has become a resilient against the FII selling. When FII starts selling, they will not immediately buy it. They want the market to go down further, and then they start again buying it and pull the market from there. So they basically work on a particular strategies. Now come to another point, that where we can see the Indian market. I think Indian market is due for a major correction, because usually the major correction happens in 2 to 3 months. I am not ruling out a correction of approximately 20% kind of a thing. So we may see the market at approximately 15,000 level to 15,200 level as of now. Scenario may change depending upon the global situation, global tensions with Russia-Ukraine crisis and China-Taiwan crisis and all those things. But as of now, I think the free flow of the money into the stock market has stopped. RBI has done a great job by not increasing the rate, and they're still on a accommodative position. So that gives a confidence to the market, but that would be short-lived. Everybody in the market also knows that sooner or later RBI will increase the repo or reverse repo to control the inflation, as well as to check the liquidity into the market. So if in a nutshell, if I say yes, US market has seen the correction, probably majority of the correction is already done. We may see some around 5-6% correction more in US market. Indian market has not seen that kind of correction, and correction is due. Probably 10% correction is done, and the 10% may be due from here. 10 to 15% correction is due from here. So this is kind of a correction which we are expecting, and we may see the market at approximately 15 to 15,200. But I would recommend you that if you see the video, you should not take the action based on the video which we are doing. You should talk to your financial advisor, make your goal clear, and continue to invest when the market is down through SIP's way or whatever way your financial advisor suggests. Because if you take the position based on the video, or if you see that yes, market might go to 15,000 and then you take the position, it may not happen also. So whatever we are telling is based on the certain judgments or certain parameters. So these parameters may not be met. So that is one of the reasons that you should not stop your investment. I always think that SIP is the best way to invest, and you should continue the SIP. SIP you should continue when the time is not favorable. You may disrupt the SIP when probably it is around 18,600 or 18,500 level. But when the market has come down, you should not disrupt the SIP, because it gives give you the advantage of a low buying. So that you should continue and make your plan goal based, so that before any big thing happen, you get your money into the in the right position. Thank you for watching the video. If you have any comments, you can send us on the comment box, or you can send us the email or WhatsApp. We will try to resolve those queries. You may subscribe to the channel and share this video among your friends and everyone. Thank you for watching.